This is trade planning with options. Katie does fantastic work on this. So she shows you analysis in the GDX market, that's gold miners, and she's going to present an option strategy to you that you could do that is bullish, that you could also learn other things that she does in our Discord channel for level 3 and 4 members, where she brings a lot of different choices to the strategy. You're going to love her analysis as she presents on the Tastyworks platform.
Hi, I'm Katie with askSlim. This week I recorded a video for our Level 3 and 4 members called Trade Planning with Options. I highlighted a potential opportunity that may be setting up in GDX, which is the VanEck Vectors Gold Miners ETF. GDX is found here on the cycle low timing tracker, which indicates that it is in a period of time when we expect the current weekly cycle in GDX to form a low and begin to move up into the rising phase of the next cycle. It is also found over here on the right, and that indicates that there has been enough positive price action in the daily time frame to trigger the bottom confirmed algorithm for that time frame. Let's go and take a look at the chart. This is a 5-year weekly chart of GDX. On the bottom, we have black cycle brackets that are 43 bars in length. Those represent the GDX cycle. We also have a gold dashed cycle bracket that represents a shifted cycle on the weekly chart in gold futures. These cycle brackets are simply a drawing tool that helps us identify average cycle lengths. These purple vertical lines show where the actual cycle lows occurred relative to the ideal. These blue vertical dashed lines on the right show a period of time of a few weeks around the ideal cycle low when we expect the current cycle in GDX to form a bottom and begin to move up into the rising phase of the next cycle. You can see that we are currently in that time frame. If the current candle holds up through the end of this week, we'll have seen enough positive price action in GDX on the weekly time frame to trigger the bottom pending algorithm for the weekly chart. And we'll see GDX in that category of the cycle low timing tracker next week. Over on the daily chart, you can see the price action that triggered the bottom confirmed algorithm for the daily time frame, and now we have been consolidating sideways for a couple of days. We have this support zone here in green, at the top of which is at 24.36 and the bottom at 23.27. If GDX can pull back into that zone and hold that zone, we would consider it a good long side setup for a move back up to the 78.6% bib at 26.11 and to the prior cycle peak resistance at 27.58. That's our initial target zone. Failing to hold the support zone would have us reevaluating the trade idea. Let's switch over to the Tastyworks platform and I'll show you the option strategy that I demonstrated for our level 3 and 4 members, which corresponds to the analysis. This is the Tastyworks platform. I'm going to go into the November monthly expiration, and the option strategy that I'm going to demonstrate is called a zebra. It's basically a stock replacement strategy. It uses less capital than purchasing 100 shares outright. Now, because this is a long side trade idea in GDX, we're going to use calls. The first thing we're going to do is look for the call that is closest to the 70 delta. The Tastyworks platform is extremely versatile, and you can set these columns up however you like. I have a delta displayed in this column right here. At this time, the closest call to 70 deltas is the 24 strike, so I'm going to purchase 2 of those. Next, I'm going to look down here and see how much extrinsic value I'm purchasing in those 2 calls. It's 190. Now, because extrinsic value is just value that will eventually disappear as we get closer and closer to expiration, we do not like to buy it. So I'm going to sell a call and collect some premium with the goal of wiping out that extrinsic value. I have extrinsic value shown in this column, and the number that is closest to the extrinsic value that I'm purchasing would be right here. It's usually around the 50 delta, which is the case right now, and I am going to sell one of those 26 strikes. So we have to pay a debit of $3.65. That's our max loss as well as our capital requirement to place the trade, $365. We have a probability of profit over here at 44%. We're picking up 87.44 long deltas, and we have to pay a daily theta of about $1.55, which is a half of what we would pay by purchasing just 2 calls. Let's take a look at the risk graph. Here's the risk graph of the zebra. Notice that the profit zone earns approximately 1-to-1, just like stock. But unlike stock, the downside risk is capped at the debit paid. Now, of course, because GDX has not yet gotten into the entry zone for this trade idea, the strikes will be different at that time. If GDX does get into that entry zone, we'll be following up on this trade idea over following weeks for our members. To learn about all of our tools and services and check out our trade ideas, please visit our website at askSlim.com.
All right, become a level 3 or 4 member to be able to see her full analysis on that in our Discord channel.